Thank you so much for joining us for this episode of Leading Change. My name is Emma, and I've got Toni with me, and we're going to be talking about the home owners industry perception, I guess is the best way to put it, to distill it down to a couple of words. But before I get to all the questions that I've got for you, can you give everybody a real quick introduction?
Sure. I'm Toni Logan. I've worked for the insurance industry for 20 plus years, worked for 2 Fortune 500 companies, all in corporate communications and marketing. And I've also worked for 2 Florida domestic insurance companies. So I will kind of throw out a quick disclaimer. I am not a licensed insurance agent. I'm not a licensed insurance adjuster. So I'm sharing information just as observations over 20 plus years of working in this industry, just the things that I've seen along the way, and hopefully things that we can improve as an industry because we have such a great industry. I love working for insurance. I love what I do every day. I'm proud of what I do every day. And I think the perception can be improved. And I think it takes work on the part of all of our stakeholders to help improve it.
Well, I'm excited to have you here, and this conversation was called for in the comments on LinkedIn, so I know there's a lot of people that are interested in what
Awesome.
you have to share. So I guess just to get started, I kind of was fumbling with the way in my introduction to talk about what we're going to talk about, but let's just start by talking about some of the challenges that lie specifically within the home insurance market, and where you think some of those perception issues kind of start.
Well, I think the biggest thing is that inherently people understand how auto insurance works. They understand that it is for a sudden and accidental event, a car accident, for instance. They understand that if somebody steals their tires or if something that is unplanned happens to their vehicle, that's when they call their auto insurance company. They never call them because they want, new brakes. They recognize that that's a maintenance related issue. They know that they have to pay for the tires when they go bald on their car. That knowledge transfer hasn't necessarily happened on the home insurance side. There is, I think, a lot of ambiguity on behalf of many consumers as to what a warranty is and what an insurance policy does. An insurance policy works obviously the same way. It is for sudden and accidental things that happen to your home. If a tornado hits your home, if unfortunately it burns down due to a fire, if somebody, again, breaks into your home, steals everything, if there is something that is unplanned, if you wake up in the morning and your pipes have burst overnight, if you come home from work and you find that, everything is gone, something that is unplanned and accidental, that's when you call your insurance company. So we don't do maintenance related things. If you notice that, you've got, water stains on your ceiling that have occurred over time, that's a maintenance related issue. You are responsible for replacing your ceiling. You are responsible for taking care of your home. We as an insurance company come in to help and assist if something sudden and accidental occurs. And what's really important to remember is insurance is a transfer of risk, but it's not a total transfer of risk. Your insurance company doesn't come in and pay for everything necessarily. So it's really, really, really important to read your contract, to really have a meaningful conversation with your insurance agent. And I think that's where some of the breakdown occurs, is that a lot of people kind of view it as a commodity and they view it as a price-based transaction. For the vast majority of us, our homes are our biggest asset. And we have to use this tool, insurance, to protect our biggest asset. And I know insurance is expensive. It can be, especially in the state of Florida, where we're dealing with external crises, man-made crises to a certain extent. But it's really important to have, like I said, that meaningful conversation with your agent and not let it all be based on price, because what happens is people don't read their insurance policy prior to a loss. After a loss, they read their policy and they recognize that there might have been some gaps, some things they didn't fully understand. And then there are mixed expectations, or I should say really missed expectations there. So I think in order to help remove that gap there. One of the biggest things that we can do is have a meaningful conversation and fully understand what the insurance contract does cover and what it doesn't cover.
So when we take a look at like some consumer behavior that's maybe driving some of this misalignment, you and I were talking about that you do a lot of like education in your community and with your family of like, that's more under the maintenance category, or this is where you would call it. Can you share a little bit of maybe like anecdotes that you've heard that kind of drive towards that mismatch in expectations?
Absolutely. So I'll give you an example. One thing is, so my home was built in 1998. I live in Florida. There was a significant change in building codes in 2002. So I obviously have an insurance policy. Insurance is intended to indemnify you and get you back to where you were prior to your loss. Again, my house was built in 1998. If I had a total loss, and they had to rebuild my home, what they'd have to do is build my home back to 1998 standards. Obviously, that doesn't work. That doesn't meet the 2002 code. So what happens is, if I don't have ordinance or law coverage, which is there to help fill in that gap, it's almost like gap insurance for auto insurance. If I don't have that ordinance or law coverage, what will happen is they will give me the money to rebuild my home to 1998 standards. Out of pocket, I will have to pay the difference between 1998 code and 2002 code. And those are some of the meaningful conversations that have to take place. Those are some of the things that if you just buy based on price, you don't necessarily understand. And I'll just throw out a number. It could be $100 or whatever, $200 that you're paying in your policy. That could be the difference between paying thousands of dollars. And again, at the end of the day, it's important to note that there are a lot of people who think, well, I've paid my premium for years and years and years, and I've never had a claim. So maybe they should pay for, XYZ. They should pay, for my roof. They should pay to, upgrade my pipes or whatever. That's not how insurance works at all. I guess the best analogy I can give you is if you pay your auto insurance throughout the year and you don't have an accident, you don't call your insurance company and say, hey, can I have a new paint job on my car? Can I get some rims, or can I, upgrade my car? Same with health insurance. If you pay for your health insurance and thank goodness you don't have some type of health incident, you don't reach out and say, hey, can I have lipo for that? You are just grateful that you had a healthy year, and then you pay your premiums the next year. It's the same premise on the home insurance side. Home insurance is intended, again, for sudden and accidental events. If you don't have a sudden and accidental event that year, it was a great year for you and for your family and for your home. And then it's time to move on to the next year. It's basically kind of how it works.
So you already started kind of talking through some of these things in terms of like making sure that you're taking the time to read your policy and like not think of insurance as a commodity. But can you talk through a little bit more of that like education piece and where you see an opportunity in the market for us to change this paradigm and help reset expectations?
One of the biggest things, again, in addition to having that meaningful conversation, I think, as insurance companies, we can do a better job of better positioning how insurance works. I think we talk always about what it covers. I think we have to be really intentional about what it doesn't cover. I think also helping people understand the claims process. And I want to emphasize the word process because that's exactly what it is. The claims process tends to take a little longer on the home insurance side. Auto is fairly intuitive. They can see all the damage, and can look at your policy, quickly see what your coverage is, and write you a check. And it's pretty much done, for the most part, in one transaction. Again, I want to emphasize I'm not a licensed insurance adjuster. But for the most part, the process is fairly quick overall. Maybe there's a lawsuit or some other issue that might occur, but it's a quicker transaction. And it depends on obviously the level of damage that occurs to your home. But keep in mind, a lot of people don't necessarily take a home inventory, which makes the process harder because a lot of times you have to, remember you've gone through this traumatic event. Your safe space has been invaded, be it a hurricane, a fire, a theft. So you're already gone. You've already gone this really traumatic event. Now you've got to kind of think about all the things that you had in your home. You've got to remember your jewelry. You've got to remember, what brand of TV you had. There are a lot of things that you have to do, especially again, if you haven't taken inventory. So that process takes a while, just getting through the emotional trauma and then trying to go through the claims process. And the initial claims adjuster typically just comes out to look and assess the damage, to really identify that this is what has happened and annotate everything. And then what happens is they share it with typically an internal adjuster who actually goes through the process of looking at your policy and looking at the damage and determining the coverage that you actually have. So that's why I want to reiterate that it is a process. There's sometimes a misconception that estimates change throughout the process. It's not necessarily that estimates change. It's more that, again, that first person went out, looked at your damage, saw what and documented everything that occurred, and then the next person in the process went and actually compared it to your coverage. And just because you have a policy doesn't necessarily mean you have coverage. Like I mentioned before, if I didn't have ordinance or law coverage, I'd still have some major out-of-pocket expenses despite the fact that I have a policy. What's also important to know, and for insurance companies and insurance agents to better explain to customers, is out-of-pocket expenses that they will incur, particularly if it's a larger loss. If somebody is displaced from their home, for instance, because of a hurricane and their home is unlivable, most policies, many policies, I'll say, do allow you to have what's called additional living expenses. But there's not this initial outlay of, let's just say, $2,000, and they just tell you, hey, go spend it on what you want. You typically have to spend those funds, keep your receipts, and then you're reimbursed for those. And there are a lot of coverages throughout the policy where you have to have an initial outlay of money and then you get reimbursed. So I think that's one of the challenges too, as far as expectation setting is concerned, is helping people better understand that in addition to the deductible, you will likely, again, depending on the severity of the loss, you will likely have some other out-of-pocket expenses. So I think it's important to be prepared for that, because that will help people better prepare themselves financially, puts money away to the side in the event of a loss, or at least not be blindsided by this conversation when they've already gone through this traumatic event. So I think that's one of the biggest things that we need to do as an industry, be it the insurance company and or agent. Better set expectations in the event of a loss and help people better prepare for what their responsibility is. And again, I'll reiterate that while insurance is a transfer of risk from the policyholder to the insurance company, it's not a total transfer of risk. Flood insurance, for instance, or flood damage is not covered by standard home insurance companies. If after a storm, you have storm surge that has come in and destroyed your home, that's messed up the foundation of your home, that's not covered by your standard home insurance policy. And if you haven't gotten flood coverage, there's nothing your home insurance company can do about that. Unfortunately, you'll likely have to go through FEMA or do whatever you have to do on that end. So those are conversations that consumers have to have as well. And like I said, the burden is on the consumer to have a meaningful conversation about coverage and not just about price. The last thing you want to do is get to a loss and find out you don't have coverage or be blindsided by some of these, the facts of your contract. So it's really important to have a meaningful conversation. And even if that means you buy your policy and you don't want to feel like you've been sold, if you come back maybe a month later to have a conversation as opposed to a sales discussion, if you want to have a conversation about, hey, what does this mean? What does coverage A mean, for instance? If you live in Florida, your proximity to the beach a lot of times may determine, the value of your home, for instance. You may have a shack on the beach, but because you live on the beach, that you could, possibly the market value of your home could be $1 million. However, what it would cost to rebuild your home is something altogether different. So understanding the difference between market value and the rebuild value, which is typically what we insure for, those are the things that people really need to get a better understanding of. So like I said, I don't know if it's, maybe you have the sales conversation and then a month later come back and have a conversation about coverage where you don't feel as a consumer like you're being upsold, but you feel like you're being educated. I just think it's time for the dialogue to change a little bit and stop focusing so much on price and really start focusing on coverage and understanding what you need to do to protect your home.
Thank you so much for taking the time to chat through all of this with me. There is so much valuable information in there in terms of how consumers can take control of educating themselves, but also a little bit on what we need to do better as an industry, which for anybody that watches this show and engages with me on LinkedIn knows I talk a lot about that education piece and how big of a deal I think it's going to be for us as we shift perceptions and really move forward into kind of the new era of insurance. So I really appreciate you taking the time to sit down and chat with me, and for everybody watching, certainly reach out to either one of us if you've got any questions, but otherwise have a wonderful day, everyone. Thank you so much for joining me for this episode of Leading Change. If you liked what you saw, be sure to subscribe and come back weekly for more expert interviews on digital transformation, change management, and emerging technologies.